Kitco Mining's special coverage of Xplor 2023 is brought to you by Radisson Mining Resources.
Welcome back to Kitco Mining's ongoing coverage of Xplor 2023 in Montreal. My next guest is Jose Vizquerra, CEO of O3 Mining. Your company has several major gold deposits in the province, and we're going to get into that, all the business strategy as well. But first, I just wanted to ask you, broadly speaking, we've seen gold prices setting new all-time highs in most currencies. We're maybe 2 or 3% off all-time highs in USD. What impact has that had on your business today and on your projections as you move forward?
First of all, thank you very much for having us here. Let's start by gold itself and trying to address what could be happening on the macro side of things. And I would say 2 months ago, we would be discussing about inflation, deflation. Are we in a moment where we are entering into recession or not? And, you know, I prefer not to focus in the specifics of how are we going to be calling this particular economic cycle. What I do know, and it's an observation, is that cycles repeats. And this cycle has repeated in the early 2000s, repeated in the 2008, and it's probably repeating right now. And each of these cycles, when gold start going up, is because the interest rates have been increased in order to hold the inflation. And as soon as they start bringing them down, gold prices tend to go up. But in this particular circumstance, as we were waiting for those interest rates to come down and accelerate the economy, particularly in the US, we had a situation between Israel and the Middle East. Now it's a much bigger geopolitical situation where we see kind of the dictatorship countries, or the ones that believed in dictatorships, and the ones that do not. We have Iran, which is a theocratic dictatorship. We have China now, which is kind of a functional dictatorship, but still a dictatorship. Russia, I mean, a very interesting situation, but still someone that under Putin can govern the country any way he wants. And then on the other side, you have the rest of the world. And that has triggered gold to start to rally immediately. What we have not seen this time is gold going together with the equities. So gold is up and equities are not moving. What the observation I have behind that is, well, maybe what is happening is that we have reached $2,000, but we haven't seen it stay in there. So I think we need time for investors to realize gold is there to stay, not only because of the current war situation, or pre-war situation, if we want to call it, and let's hope stays there, and then gold prices would rise. If we transfer this to the initial comment on where gold should be, if we think about gold in 2008, it was already at $1,800 gold. If we take inflation from there to today, we should be around $2,600 gold. And if we take into consideration higher inflation rates, I mean, we should be like around $2,600 gold. We're not there. And I think this is just a matter of time. And we will continue to see gold rallying. But in any case, gold is right now in a good price. It would be unfair for me to say that, you know, over $1,800 gold, this is not a good price. It is a good price.
Historically speaking, it's a very strong price.
It is a good price.
And with all the headwinds we still have, you know, interest rates have not begun to come down. And for gold to be this high with these types of headwinds is very encouraging for people who are expecting that rally coming out of interest rates coming back down.
Absolutely. And that segues to your question. How does that impact the rest? And I think that the impact is immediately seen in operations, speaking about mining side in particular, in those operations that are dealing in areas with lack of infrastructure. Lack of infrastructure has to do with lack of energy as well. And energy is a very big part of our cycle, if you want to call it, of where we live, right? Because the mining industry, the people that are in operation, like over 20% is energy, if it's not 30%. So now imagine what's happening in those areas where there is no infrastructure, like no hydroelectric power, where they actually have to use oil. Oil prices are going to go to the roof now, and in a moment of pre-war, even more. So those areas with lack of infrastructure, in many cases lack of infrastructure and lack of rule of law, we will see a lot of mining companies, I imagine, in areas in South America, in areas in Africa, that will be the first one filling it. Then would be transition to places like some areas in Canada and in the US where there is more infrastructure. I think the initial impact in terms of costs going up, we will see it outside of Canada and the US, the initial. Because afterward, it's going to hit us anyways, because it's going to be hitting on manpower. But on infrastructure, remember that some of the new projects will need roads and build the different energy stations, and they'll have to build even to bring satellites for phones and build the kitchens, and this part of the business is what's going to be, I think, rallying to the top. What is the situation that I see? I think that there will be a moment where we're going to be transitioning from only looking into the commodity price to supply and demand. And at that moment, two things are going to happen. One, those producers that are not in the first quartile will be prevailing. Sorry, the ones that are not in the first quartile will be the first one coming down. The ones in the first quartile, as they come down, things reshift and they go back to where they had to be. And that is one of the reasons why the only few companies, while gold has been rising and other equities has not been moving, are the majors that are better suited for times of difficulties, or majors that are located in better jurisdictions.
Right, but jurisdictions is a big part of this, so I wanted to...
Like Agnico,
yes.
Like Newmont. They have been set themselves in better jurisdictions.
Right. Now, you're also in a very good jurisdiction. You have a few multi-million ounce projects right here in Quebec. Where are these? How important is that from in terms of planning out for the future in this environment that you're describing? How important is that to have your major projects located in an environment like Quebec and in areas where you have that infrastructure, you have hydroelectric power, you have roads, you have infrastructure that's already built up that can serve these projects?
Well, it is extremely important. I mean, if we think about what we need for a mining company to be successful, the first thing you need is the people, the asset, and then the money. We have been very privileged to be in an area like Val-d'Or. And it's interesting because when you say Val-d'Or, it doesn't really ring your bell, but it's Val-d'Or, which at the end is the value of gold. A valley where more than 50 million ounces has been found. We tend to say in geology that you try to find elephants in a country of elephants. That is Val-d'Or. It's a place with a lot of history in mining. A lot of history that repeats. It's very interesting because some mines were in production. For example, Canadian Malartic went in production in the early 1900s or mid-1900s. Then they went bankruptcy. Then it was picked up by Osisko. Then it was built. Then we went into a moment of running out of resource. Now Agnico has been able to find a new area, but underground now. So we're going to be producing the same amount of gold, but at a different grade. Before it was 60,000 tons of 1 gram. Now it's going to be 20,000 tons of 3 grams. But new discovery. The same thing happened with Sigma-Lamaque. Started production, went out of production. Integra Resources found a new discovery, then was bought by El Dorado, back again into production. Kina. The Kina that Wesdome has went into production, out of resources, back again into production.
Well, you have the easy gold at a time of high prices. You run out of easy gold, prices go down. Then technology advances. You do a better job of exploration. You can get at it better, and now you have prices coming back up in today's dollar.
And that's where we are with Marban. Marban was a mine in the 1980s, ran out of ore due to gold prices because it was an underground mine. And that's where I love to say, and I continue to say, we're part of the solution. Because this was already a brownfield area. It was already mined. And there were things that were not done right at that moment. Now is our opportunity to come in here, show the resource, be able to extract it, and leave things in a proper way. And we could be also part of this circular economy as Canadian Malartic ran out of ore in the open pit, which is something that they have been very vocal saying that they will transition from open pit to underground, where maybe, or hopefully, some of the manpower can transition. The most important thing, as we were talking before in a project, is manpower as well. So if we have prepared professionals, if we have prepared companies that has contractors that can move knowing the business into something like Marban, will be spectacular for the area of Malartic, of Val-d'Or itself, of Dubuisson, of the area where we operate. And that would be part of this circular economy where, again, I wanted to reinstate that this is part of the solution in this value of gold. No?
Right. Well, this gets a bit into O3's business strategy. So I wanted to ask you, what kinds of partners and investors are you trying to attract when you're looking at this as a kind of a circular economy? And what types of projects do you look for when you're trying to identify the kinds of prospects that they would also be aligned with?
So with regards to investors, we have, in a sense, in our company, at least right now, three kinds of investors. We have Osisco, which is one of our major shareholders. Our family out of Peru has 7% of this company. Institutional shareholders, which comes mostly from the UK, from Switzerland, from the US, and some from Canada as well. And then is the retail side of the investors. And that is the area where we have to work harder now. Because these groups are, if they are investing with us, they're investing in a development project. And as we know, if we see the Lassonde curve, we start in exploration, things start going up. But then as you start going to development, usually the stock price comes down because the market assumes that you will need significant amount of money to put it back into production. So they decide to wait and not to do much. And then is when the stock comes down. But it tends to go back again. The opportunity we have where we operate is the fact that there are other mines that are right now in operation and where synergies can be exploited by working together. Now, it really will depend on what are our, capacity, in a sense, to find these synergies with the different operator groups and make sure that we can optimize the resource, meaning by that the infrastructure that exists right now in Val-d'Or, in order to bring value to them, to us, to our shareholders, but also to our stakeholders. And that will be probably the most important thing. And that goes to what you were talking about. What are your catalysts? So we were talking about the fact that we have a couple of multi-million ounce deposits right now in Val-d'Or. That has been our focus. We have 30,000 hectares, which we continue to do exploration. In the case of Marban Alliance, we moved from 1.6 million ounces to pretty much today almost 3 million ounces. It's around 60 million tons of 0.9 grams per ton. And that project will cost $430 million to put it into production. If we were able to find synergies and find someone that can actually process our ore, our capex goes in half. Of course, the NPV is not going to change that much because you transfer from one side to the other. These are like communicant vessels, right? It goes from capex to operating costs. But still, the impact to society will be very important in the good sense of things.
You're using existing infrastructure, existing manpower.
Precisely.
You're not having to reinvent the wheel in that area.
And that is the reason why I feel so confident about O3 Mining. Because O3 Mining has two avenues to bring value to investors. One, as a fundamental value, because I believe that we can put the mine into production. We can raise the $400 million.
And you have 100% ownership of all of these Quebec properties.
We have 100% of this.
So that gives you a lot of flexibility, and it gives you the ability to make these types of decisions based on which way the wind is blowing or which types of partnerships present themselves.
Correct. And that attracts one type of investor, which is a value-driven investor, the one that wants to come in and wait 5 or 6 years and get a return of 4x, 5x, whatever is the case. They have to make their assessment. I'm not going to tell them that. But I can tell you that our company is worth $100 million and the net present value is $463 million, which equates to 4.63x. And this is a $1,700 gold. If we were at $2,000 gold, then this increments even more.
And when 2,000 becomes the floor, that once again, you have to recalculate everything based on a floor of 2,000, and we seem to be on the verge of that.
But then comes the transaction investor, the investor that want to come in here for an event. What is the event that I can see in O3 that could happen? An alliance with someone around where we don't have to invest $400 million, but either half, and will give credibility to the asset, and there will be certainty on the asset as well. So validation and certainty, boom, immediately there will be an unlock of value. So that investor could come into here because they believe that could happen. And they have to believe in the ability of management to do that. 2, in the conversion of more resources, so keep adding resources. 3, in the fact that we own some equities of other companies, so they could see that as an alternative. And finally, O3 had some assets in James Bay, where we had lithium, and we are moving that into a new company that will be launched in the next couple of weeks, called EE. Which will be private, trying to go public in September. That could be another event of unlocking value for an investor coming in. So one is value-driven, the other one transaction-driven. And that makes this story very unique.
Now, one thing I was wondering when you were describing these potential synergies of established players that are right in the same area, and you could potentially be a solution to their problem in the coming years. You talked about it a lot in terms of lowering capex and in terms of the money side. What impact does that have in terms of the timeline? Because their existing infrastructure, their people, does that move up the timeline in terms of successfully exploiting and getting into production if you're partnering with established players in the area as opposed to having to build it up yourself?
I would expect so, but I don't have certainty. I think that time is the time, and the government of Quebec will take the time they have to take. I would expect that by having this relationship, now you are essentially asking for a mining permit rather than for construction permit of a mill, for a tailings dam permit to put there the tailings. So I would assume that those things will accelerate. We are pretty much asking for a permit of a quarry, in a sense. Right, so that would be really interesting, and I think it is time for the mining industry to work together. For a long time, everyone works in their silos, and I think the mining industry requires all of us to be part of the same dream. And if you don't want to be part of the same dream, then just take it, but don't stop it in the middle where no one can work on it. Right? We call it in Spanish el perro del hortelano, no? The dog that doesn't want anyone to eat the food and doesn't allow anyone to eat it either. No? It doesn't want to eat it and doesn't want anyone to eat it. At least let's avoid that.
That's just value that's trapped and it's not benefiting anybody really.
Yeah. So I would assume that we are very smart people in the industry, and what will happen is a beautiful synergy and a beautiful marriage that can be created in Val-d'Or in order to develop the area, no? Val-d'Or, Malartic, Dubuisson, no? So the break, the Cadillac Lake break.
All right, and what are some significant milestones that you've achieved this year, and maybe some milestones on the horizon that we can look forward to?
So a couple of things. Well, first of all, we accomplished a pre-feasibility study, which was a major milestone. That is done only with measured and indicated resources. We came up with a new resource for Malartic H, which is a new area out of the pre-feasibility where we added another 320,000 ounces of gold in inferred resources. For next year, we're going to be converting that, and we're going to begin to work on the feasibility study to then start the permitting. With the feasibility study, of course, we want to tie that up to see first if we can work with Synergies and make sure that that feasibility study is done with sending our ore to a current facility rather than us building it, because if we're going to ask for a permit, might as well ask for it like with how it's going to work and not change it in the middle.
Right.
And the last thing is we were drilling in the extension of Marvan, so northwest, in an area called Horizon, where we have been able to identify some sulfides, which makes us believe that what we have is a style of mineralization different than what we had in the break before, because mostly was lode gold deposits, was essentially fluids coming out with different veins of quartz and carbonate, where gold was sitting with tourmaline. In this other area, what we see is more a volcanic massive sulfide. So what we see is a different setting, a volcanogenic setting, which tends to be richer in base metals. So we will see where we get there, but that could be another unlocking value, as we were talking, no? On the value proposition, on the transaction proposition. If we have a discovery, that's where we're going to get the most amount of return for our investors and for our stakeholders.
All right. Well, it sounds like you'll be testing your theory of companies identifying synergies and working together successfully.
Yeah.
It sounds like this coming year will be where you begin to, the timeline will force you to kind of prove that concept. So we look forward to seeing when that happens, and we'll be sure to have you back to when you have an announcement.
It'll be a pleasure. Yeah.
Thank you so much for taking the time to talk to us today.
Thank you for your time. It's been a pleasure.
I'm Ernest Hoffman for Kitco Mining. Stay tuned for more coverage from Xplor 2023 in Montreal.
Kitco Mining's special coverage of Xplor 2023 is brought to you by Radisson Mining Resources.